Good morning, viewers. I'm Binette Gasson, CRO at Catalyst Fund Managers, and this morning I'm joined by Imdad Nana, Portfolio Manager of our SA long-only listed property portfolios. Imdad, we've had a beautiful rally within the SA listed property space. In 2024, we saw the LP delivering roughly 30%. I think it's important that it's highlighted that we saw a similar thing happen in 2023, but that was isolated to basically the last month of the year, last month or two. So we've had like 2 years where SA listed property has come out as the best performing asset classes, outperforming equities, bonds and cash. Can you maybe explain to our viewers what are some of the key drivers behind this stellar performance?
I think if you look at it, it was a stabilization in the macro and political environment following the formation of the Government of National Unity, and then also stable energy generation from Eskom. Also, if you look at the property return over the last couple of years, including the last 2 years, it looks more as a normalization or a correction as market conditions stabilized and as fundamentals have improved. Because if you look at what's occurred in 2020, 2021, the sector didn't deliver a great performance. So it's been a few tough years, but it's pleasing to have some good short-term performance.
Indeed. I think we were all sitting on the edge of our seat waiting for this to happen. Imdad, if we now focus in on this performance, would you say that the fundamentals are actually stacking up? And would you say that there's a comparative, like almost catalyst for earnings to also grow in accordance?
So fundamentals have improved, and we've seen a general upgrade or improvement to the earnings profile for the sector. That is market conditions, but then also debt costs. And in 2024, we saw a marginal increase in the growth of the earnings. That's despite higher refinancing cost. As you know, many property companies fix their debt, so any changes on interest rates is a more gradual impact. Going forward, we think debt costs should plateau and decrease depending on the quantum of interest rate cuts in the market.
If we then look forward and we focus on 2025, but we focus on the growth aspect within the sector, what would you say that looks like from an earnings and a distribution point of view?
We are looking at inflationary growth for 2025. Our funds available for distribution yield is at roughly about 8%. And then over the short to medium term, we are expecting sort of inflationary type growth.
And then if we look at the recent announcement regarding the benchmarks. So, I mean, we've transitioned most of our segregated mandates as well as our unit trust within the space. We've transitioned that to the LP, right? But there are still some market participants that make use of the SAPI. So we now know that it's soon going to be terminated as a benchmark within the space. What are your views regarding this?
We think it's positive. If you look at the constituents of the SAPI and the LP, the biggest constituent in the SAPI is Nepi Rockcastle, and that represents about 26% of the index. Compare that to the LP, where it's capped at 15. Although it's still the biggest, but it gets capped at 15, that reduces concentration risk. There is more constituents in the LP, so it provides better diversification and improved liquidity through more counters in the LP. So we think it's positive. Also, the JSE separately announced the expansion of the LP, or the inclusion criteria in the LP, to include property companies in the fledgling index that meet liquidity requirements. So that would improve higher number of constituents, more diversification, and I think more market awareness on SA listed property. So I think that's also positive.
Imdad, in your report, you touch on a lot of fundamental aspects regarding the listed property space, and you touch on all the supply and demand fundamental aspects of retail, offices, industrial, but you also then go into the substantial discount to NAV that we're still seeing in the sector, and I believe it's roughly 17%. So can you unpack that for us? How do you see that playing out in the next year?
So 17% as at the end of December. What that implies is that there's a disconnect between independent property valuations, which is the build-up or the main build-up of the NAV, and what the market is willing to pay for these assets. We believe that that discount should narrow if market conditions continue to improve, economic fundamentals continue to improve, and also if we see more transactional activities closer to NAV, provides the market more comfort that those NAVs are realizable, and hence the discount to narrow.
Imdad, we get this question a lot from investors, as you would know, and our clients to ask, is this crazy performance sustainable? And I think you've touched on a lot of the positive aspects of it. But if I had to ask you, what are some of the risks or what are some of the challenges that you foresee in the sector, what would those be?
Sure. I think one of the key risks is conditions from a political and macro situation, both locally and abroad. We've seen many elections happen last year. We have some key elections happening this year. There is a lot of talk on different policy changes that will affect not just South Africa, but the broader worldwide economy and financial situation. So it's always important to keep an eye on that, and also monetary policy, whether we are going to see a divergence between the US, Europe, South Africa, and how that plays out over the course of the year. One of the positives has been Eskom's energy generation. Touch wood that continues, but that's always a risk, and if the energy generation continues to improve, that should still be a nice tailwind to earnings for the sector through not just reduced load shedding, but also historical solar investment. So it's a better yield and better efficiency for the property companies. And then lastly, also situations or more local situations, something like the grey list, whether South Africa gets removed from that and whether that provides renewed investor interest, not just in the bond market or in the rand, but then filters through the broader equity markets and also in property.
Imdad, if I read you correctly, it sounds like SA listed property is past the worst, and things sound like they're quite positive and that we're in this recovery phase. And it sounds like there's quite a lot of catalyst for sustainable growth within the sector. Maybe just if you could, in summary, leave our viewers with a few key takeaways, what would that be going into 2025?
I think if you look at the sector, I think it still provides a compelling risk-adjusted return. Fundamentals are improving, macroeconomic conditions are stabilizing, we have good energy generation, so that tailwind is coming through. And I think combining all of those things, we have seen an improvement in the earnings profile for the sector. Like I mentioned earlier, we are expecting sort of inflationary type growth, and I think if we do get broader macro stability, both locally and globally, that should also be a nice positive tailwind for the sector's performance for the year.
Imdad, as always, thank you. Thank you for sharing your valuable insights with me and with our viewers today. Viewers, if you'd like to learn more about SA listed property, please refer to our H2 2024 dashboard for further insights about what Imdad shared with us today. And we as Catalyst would like to wish you all a prosperous 2025. Until next time, thank you and goodbye.
Thank you.